All right, everyone. Welcome back to Nadlin Forum Podcast Daily. I'm Ruby, here with Leah. Today is kind of one of those rare moments where we're not just clutching our heads in disbelief at mortgage rates, because for once, they've actually caught their breath after that bonkers 2-day spike. Remember last week? Rates shot up by, 0.25% all at once? Felt like everyone was panicking, and suddenly today the whole market just stopped moving. Sideways day is what the trade folks call it, which sounds a bit like financial yoga, but basically it means rates aren't running up the mountain or tumbling back down, just catching their breath.
Yeah, and I'll add, when you see this sideways action right after big swings, it's almost like the lenders and buyers finally get a coffee break. But even more interesting is that today's rates, even after that spike, are still among the lowest we've seen for, I think, nearly a year. That's actually good news, right? I think we're at an 11-month low. So for anyone who's maybe been waiting on the sidelines, thinking they missed the boat, well, you might still be in the game.
Yeah, and that's actually what happened to my friend Jess. She freaked out during the spike and rushed to lock her refinance. Like, she was calling lenders at 9 p.m, totally convinced it would just soar further. But then, classic, rates settled back down the very next day. So now she's looking at everyone else getting a slightly better deal and wondering if she was just too quick on the draw.
That's honestly a story I hear all the time, even with my clients. The lesson is these tiny movements can feel huge in the moment, but sometimes taking a pause, letting things go sideways for a bit, can be just as important as catching the lowest possible rate. And we see this every year, a volatile stretch, then a breather, then you blink and the market changes again.
Speaking of blinking and missing things, the reason rates are suddenly having a lie down today is because everyone's kind of holding their breath for the next round of economic numbers, right? It's not just vibes, it's like every bit of economic news, from job reports to inflation, just sends mortgage rates bouncing all over the joint.
Absolutely. I think it's sometimes hard for people outside the industry to realize how powerful these economic signals are. Inflation number goes up a touch, boom, lenders freak out and push rates higher. Jobs report comes in weak or strong, it can move things just as fast. And especially now, everyone's watching what the Fed will do next. Their speeches, even subtle wording, have a real impact. I'm constantly following every Fed update for my clients because it signals where the winds might shift.
You almost become like one of those weather guys, but instead of clouds, you're tracking the Fed chair's facial expressions as he reads the notes. And, you watch enough of those speeches and you realize it's all about not just what they do, but what people think they'll do next.
Exactly. It's all about expectations. I hear from clients asking, should I lock my rate now or wait? Is this the calm before another storm, or are we done with the big waves? There's never a perfect answer, right? You can guess forever and still miss the mark. In my experience, when there's a little calm like this, it might be safer to lock if the payment fits your budget. Because as soon as the next jobs report or inflation data drops, everything could change again.
But I also get why some folks want to wait it out. If you've watched rates nosedive right after you locked, that stings. You have to balance patience with risk. And as we talked about in our episode on Fed cuts and mortgage rate surprises, just because the Fed says cut doesn't mean mortgage rates will follow, right?
Yeah, that's exactly it. Sometimes the Fed cuts and rates go up because the bond market is thinking about what's next. So now, with big speeches and economic data set for early October, it's one of those moments where borrowers really gotta pay attention, but also not drive themselves crazy.
So let's make it real for people listening. If you're a home buyer or a homeowner watching all this unfold, do you just scramble to do something? Or is there actually a smart, chill way to navigate it?
Best question. My takeaway is always, There's no shame in being a little cautious, but you also shouldn't let fear freeze you. I had a Nadlan Forum client recently. He waited, said, let's see if the market gives us a better rate next week. Then, boom, the volatility hit, and he ended up with a worse rate, even though he'd been watching so closely. It's almost like the market waits until you look away. Then it moves.
It's like when you're waiting for the perfect wave at the beach, and by the time you jump in, all the surfers are gone and you missed it. Terrible analogy, but basically, sometimes good enough is good enough.
No, it's actually perfect. With so much uncertainty, you've got to have your loan paperwork ready, budget in check, and have those quick chats with your broker or lender lined up. The faster you can act when the window opens, the better. Especially with October coming. Like we said earlier, all these economic reports are lining up and things could turn overnight. So stay alert, check for updates, maybe even set calendar reminders for big Fed days.
And remember, it's not just about pounding refresh on mortgage rate websites. Get across what's driving the movement, like tune in here, keep up with the data, and talk to your people. No shame in asking for help, especially in this market.
Exactly. And I always tell my clients, don't worry about getting the perfect rate. Focus on a good rate that works for your life. The market will always move, but if you're ready, informed, and kind of mentally prepped for another round of surprises, you'll be ahead of most.
All right, that's it from us today. Next episode, we'll break down what actually happens if the Fed's October report shocks the market, so make sure you're subscribed. Lior, always a blast chatting.
Thanks, Ruby. Always fun. Take care, everybody. Stay sharp, and we'll see you next time.